Hi, folks. So this is going to be a voiceover. So this is after the fact. I'm giving you commentary, but the commentary was given to you live during the Telegram real-time commentary. I usually do the audio clips, but because I had a tech for my HVAC system here today, we had a bad gas valve. There was a lot of interruptions between that and my puppy Piper. She got sick, so there was a whole lot of that stuff going on. Very difficult today. So the market, I used the inversion fair value gap I mentioned, and I mentioned the bearish breaker. And I'm actually highlighting the order block that was initially used to send price higher. It was as a personal note from me. I want to see it become like an inversion PD array. In other words, whatever was bullish, if it's bearish, I want to see it trade lower. So I just took one contract off, and I'm bringing the stop down. And this is high resistance liquidity run conditions. I mean, it's very, very, very challenging, even for me. And I know it sounds arrogant and egotistical to some of you, but it's the facts. I mean, it was challenging, and market staying in a very, very tight range and coming back and stopping me out. So I'm going to go in and try it again, and I reacted off that bearish breaker, and I want to see it trade down into that blue shaded area where I have now lowered that buy limit order. I mentioned in the Telegram channel that it would be likely that the lunch macro would send it down to 21,835 to 21,825 respectively. And I always have a best case scenario. I had the limit order to cover way, way, way below that, because if I happen to catch a tiger by the tail, it's always fun to be able to get something extra more than you originally wanted. So I wanted to see it break lower here after working the low of that inversion fair value gap that's shaded in orange. And now, because it's the type of day it is, I moved my stop to cover costs. And admittedly, in hindsight, I'm going to regret not taking a partial as it went below that low, because I'm talking to the HVAC tech at this time, and I'm getting frustrated with him because he's assuming that I know his job. If I did, I wouldn't hire him. I would do it myself, right? So, at any rate, um, I'm looking for a breakdown further, and I'm extending that order block with the expectation that it would likely pull down lower. And just overall, it's just a very, very, very difficult day. It's not helping matters that we have all of the Fed chair testimonies that's going to happen this week, and we have high impact news also hitting. So it's a lot of things that's making it much more challenging. Plus, we're in that big daily range that I mentioned in the Shotgun Saturday. So I'm pairing the risk of open profit and bringing in more potential profit should happen. I mentioned at the time that if it goes to consequent encroachment inversion fair value gap, that would be the breaks for me. That's the reason why you're seeing it now, because I had the stop loss there. And another time here where I was really better equipped if I would have taken a partial on there, because of the profile day being high resistance. I should have taken a contract off that when it went below the short-term low. But I'm sitting here watching it, and I want to see it fail to go up into half of the order block that I have highlighted here as an inversion block. Okay, and I want to see it not do that, but it stopped me out, and that's the breaks for today. So very, very challenging, even for that three-letter guy, ICT. But was able to get some pizza money. So we can take a look at this now. You can see, trying to get in here and put on some more shorts here, trying once more to get down into that 21,835 to 21,825. I'm basically selling the low of that inversion fair value gap. HVAC tech guy just left, and I looked at the chart and I was like, well, let me see if I can skin this cat still. Risk is at the top of the inversion fair value gap, and there is a partial. And again, we're going to see if I can get down into that lower portion of that buy side of balance, sell side efficiency. And again, now the stop also has been brought down to cover costs. So again, just very, very, very challenging today. Very challenging. Lots of manipulation, lots of just, you know, opposition, really. I'm checking ES here, and there's my second partial. And now I'm just going to see what I can get out of this, see if there's any extra juice in this lemon, if you will. I'm completely content with getting stopped out because I'm honestly a little ticked off because I had too many things. I'm watching that small little fair value gap, and I want to see it break hard from here, but it's being very reluctant to do so. So I'm going to extend this out here and share my perspective. I want to see it act as an inversion fair value gap here. So I want to see it break down, go below it to the downside. And then if it has to come back up in again, I don't want to see it explore an upper half. And again, just an overzealous target because I'm trying not to worry about it getting to a specific target. I'm worried about watching what price is showing me each candlestick. So if it's looming close to my target, I'm going to be worried about that. So to remove that, I just move the target completely out of the way. I'm managing more specifically about, does it still want to respect that inversion fair value gap, or what I'm viewing as a potential inversion fair value gap? Let's say it that way. And I already don't like what it's doing here. It's being very stubborn. Okay. And the fact that it's spending so much time in an inversion fair value gap is problematic. But because I've already taken two partials, I'm just going to let it ride and see what happens. And if I get stopped out, I get stopped out. If it breaks lower, then I will consider moving the stop loss lower. That's what I'm thinking at that time. Now, I already know this is problematic, but I'm going to commit to the trade and let you see. Even in days like this, like I would want to generally hold and put the stop loss just a little bit above, but I'm going to take one off just to prove that this is how you might want to do this. And that way, if you are likely to get stopped out, at least it's not taking the full open profit before getting stopped out. So I was able to bank another contract there in the event that it should pop up and get the stop loss. It's not taking two contracts, it's just taking one. Okay, and lower the stop down aggressively to that little short-term high, because if it's going to go there, folks, then I don't want to be in it any longer. So I'm, I facetiously posted in the Telegram channel that I could actually feel my hair's turning gray today. And it's only because, not because of the price action, but because of all the distractions here at home. So I was very, very much outnumbered with all of the adversities. So I kind of felt like a retail trader for the first day. And there I am getting stopped out. So I'll show you the executions right there. And just in case somebody wants to ask about that chart over there, it's the same stuff over there. I hope you found it insightful. Until next time, be safe.